Right. As our next panelists take the stage, I'll fill the time up with just a couple of words. I'm always proud and amazed, actually, at the amount of innovation that comes out of this sector of the marketplace. And those last few presentations is a perfect example of that. Absolutely fantastic, they really are. This is the CEO's panel, the big shots of the industry. 2013, very, very busy year. Volumes are up, CFDs are up, M&As are up. Malta takes on Cyprus, Shanghai Free Trade Zone, it's all on. Very, very busy. I think we're missing just one, are we? One more. Which of course begs the question of what's going to happen in 2014. There's three words that are going to affect liquidity, I think, quite considerably. Okay. Certainly. Okay. There are seats in the front here for anyone up the back with sore feet. I'd suggest you grab one quick. They'll go very fast. Here he is. Drew's on his way. So there's three words that are going to affect liquidity quite heavily in 2014, and those are taper, regulation, and clearing. Scary words, I think, for the industry at large. But this next panel obviously is the most important thing that we're all here for, which is building a business in Asia and the do's and don'ts and the difficulties and highlights of doing so. So we have Alex, Lars, Drew, Glenn, and Andrew. And without further ado, I'd like to introduce Aries Romaz, the editor-in-chief of Forex Magnates, to ask them a bunch of difficult questions. Over to you.
Hello, everybody. So, as John said, without further ado, we should simply get down to business. I think this is one of the most fascinating panels that we're going to have. We're talking about successfully establishing a business in Asia. It's not enough to establish a business in Asia. It's supposed to be successful. As you know, it is Forex Magnates' vision to promote transparency in the industry, and I think that there's nothing that promotes transparency more than the ability to simply sit with this distinguished group and talk to them about this type of issue with the people who make and break the industry. Surprisingly, those who break the industry were reluctant to show up, so we're going to speak to those who make the industry. Let's start by introducing. Can each take 1 minute to introduce himself and his company?
I'm Drew Neve. I'm the CEO of FXCM, and FXCM gets about 50% of its revenues from Asia. So, I think it's a very relevant discussion thing for us. And I think Asia is obviously not only 50% of revenues, but it's also the fastest growing portion of the business. Not a mystery to, anyone else that's in the room why.
I'm Andrew Baginski. I'm Andrew Baginski from IC Markets. We're based in Sydney. We're an ECM broker. We've got a rather large footprint in China, as well as Australia.
I'm Glenn Stevens, CEO of Gain Capital. I actually thought with these white leather chairs this was an eligible bachelor game, but apparently it's a more serious note. We first came to Asia in 2000 and have been committed to this market for a long time, and I think it's testimony to my colleagues that are up here. That's an important region, obviously, as Drew mentioned as well, so it'll be interesting to chat about it. Thanks.
My name is Lars Christensen. I've co-founded Saxo Bank in 1992 with my partner Kim Fournet, and we're still running the business as co-CEOs. We got our first presence in Asia in 2006 when we opened up in Singapore, and today we have a number of offices around the region, but with the hub for those activities sitting in Singapore. We also have business pretty much globally, probably a little bit less concentrated in APAC than many of the rest of you. We do about 19% of our business in this region. little bit up from last year, but we're pretty widely spread over the rest of the world as well.
My name's Alex Knight. I work for Citi. I look after FX Prime Brokerage for Asia, and I look after the margin trading business for the bank as well. Personally, I moved to Singapore in 2007 to set up the margin trading business there. At the time it was being set up, and also to start up FX Prime Brokerage there for Citi. And I think, as we'll hear during the course of the discussion today, Asia for the businesses that I look after and for Citi in general, of course, is an enormous area of influence for us.
So basically, most of you already broached the first issue that I would like to address, and that is, when did you first recognize the potential that the Asian market has when it comes to FX, and how did you pursue that potential? Let's start with Drew.
I think for us, sort of realizing, very early on we started in 1999, and I think we saw, even though we only had a U.S. presence physically, that a lot of the client interest was Asian, and a lot of, as soon as you hired a Chinese speaker and the word got around that you can speak Chinese, then, Chinese speakers started calling, and so on and so on. I think that was kind of the first indication that this is not a fluke. And so everybody knows, obviously, okay, Asia's a big market, and all the thing, Chinese like to gamble as if nobody else does, and all of that kind of stuff. I think a lot of it, what the key to emerging markets in general, and China, is that essentially, unlike the U.S., for example, the other markets, aren't very good. So if you look at the U.S. clients have, really good access. They have a best execution guarantee from the regulator. They have insurance for $500,000 on their funds. They have a million different benefits of why that's good. Chinese investors don't have that and it's not just Chinese, Indonesians, Malaysians, everyone else do not have that with the local stock exchanges and local brokers. And I think that's kind of where, FX is one of the only financial markets in the world that essentially an emerging market investor from Asia can trade at the same prices and the same quality as a Western investor. Right? There's literally no other market like it, and I think from our perspective, is what we realized early on is essentially the substitute products or the adjacent products, they just suck over here. And so that really, made FX comparatively more attractive. And I think our first clients were Asian. We realized that, really quickly, and I think it's something that, we put a lot to it, and a lot of resources right away. And I think it's probably one of the most successful decisions we've ever done is really, recognize that very early on.
Andrew?
Yeah, look, for us it was very logical. We're based in Sydney, so you get a lot of there's a lot of Chinese people in the region, very close to China, obviously, in terms of the time difference. And it made sense for us to really approach this market. ASIC's a relatively good regulator, one of the better known regulators in the area. And, the Chinese clients that we typically get are those that go for an ECN offering, something that's a little bit more sophisticated than most brokers would offer, or most of the old school market maker brokers would offer. So we saw a niche there, and we began to actively promote in the region. But, you can't ignore the size of the market. You look at the growth of Macau, 7 times more gaming revenue than Vegas. So, if you look at the aging demographics in the region and the increase in middle class population, then it's a market you can't ignore.
Glenn?
I guess the only kind of recalibration I would mention is that it's kind of a misnomer to call it an Asian market. It's the same mistake that a lot of people call it in terms of a Middle Eastern market or a South American market. I think it's a series of subset markets, and I think that Granted, we're in Macau, so PRC is one type of market, HK is a market, Singapore is a market. There's certain nuances, there's certain characteristics of the psyche of the user base. That's whether it's more sophisticated, less sophisticated, a direct market opportunity, an indirect marketing opportunity. I think the first thing to do is actually slice the market. Americans are a perfect example of saying the Middle East, or Venezuela and Brazil are two very different markets in South America. So to lump Asian markets together, I think is a mistake, and actually try to focus your product and your approach kind of into each subset market. Now, granted, the PRC market, just by sheer bulk, outweighs quite a few of the other markets. It doesn't mean they can't be lucrative opportunities, but it obviously is the elephant in the room, if you will. We've been doing business here for about 15 years, and it was, it's simply amazing to fly in here in 2002 into Shanghai, for example. You didn't even come to Macau at that point, and then you fly in a decade later, and it's as if you're going to a completely different country, a completely different city. So is the user base change with it. So I guess our kind of understanding or mantra is to try to be as iteratively adaptive as you can, meaning you can't set it and forget it. You can't come up with a strategy and then think you're done. I think it's micro strategies have to apply amongst sub-markets and also amongst time as the level of sophistication for the client changes. You mentioned about kind of sophistication changing and whether it's a style of market or a type of product. I think that's the part you have to stay sensitive to, so that unfortunately you're on a treadmill and you're not done. It kind of keeps going around.
It is a very crucial point that you, of course, say that one must differentiate between the different markets in Asia. Basically, when I'm saying Asia, it's more for convenience purposes, but it is very important. So of course all of you should feel convenient to speak about the specific areas in which your companies are focused. If we can continue to Lars.
Yeah, I think apart from Citi, obviously, we're probably the only one in this panel that kind of had a real existence before online trading. So Saxo Bank was not originally intended as an online trading platform. In fact, neither Kim or I think, had even heard about the internet when we started the business. So we were a classic pick up the phone and call people. That obviously gave us a very restrictive geographical existence, if you will. We had Denmark. The most exotic thing that we did for a long time was Sweden, and that was kind of our focus, Scandinavia, for the first few years. Then we happened to come across this thing called the internet, and we built a platform, launched the first version in 1997. And that, of course, was a huge eye-opener, because you began to see people coming in from all over the world, although in very small numbers in the beginning. And that kind of gave you a perspective of where business really was located. I can remember we got a huge number of people coming from Italy at that time. And we got a lot of numbers coming in from India and places like that would turn out to be typically students that were studying the markets. And we begin to get a lot of people from Australia, New Zealand, different places around the Asian part, often Chinese communities. So we were kind of driven a little bit by people that found us by themselves. And in those days, of course, with much less regulation, then you could pick up these clients as you went along. Over time, that changed. We had quite a good business in Australia that we had to hand over to a partner, white label partner we had down there. And then we felt we better begin to set up some offices around the region, starting out in Singapore, which is still our hub. And I think that was a good decision to have a hub out here. It's a little bit more dispersed over multiple centers here than in Europe, where London is the obvious focus. So we built them a little bit differently. Singapore we built from scratch. Then we took over a broker in Australia and built on the basis of that. We took over a small brokerage in Japan, built on the basis of that, because we felt, particularly in Japan, we didn't want to build it up from scratch ourselves, understanding very little of that market at the time. And also in Hong Kong, we chose to build it up ourselves. So we varied a little bit in approach from different countries. We're quite a philosophy-driven business, so it means a lot to us that the cultures are pretty much the same across. I mean, the way that we do business and the way that the offices are equipped. So we send out a little pioneering group to Singapore from Copenhagen that's set up with an equal number of local people and sort of started building it up from there. And I think that was one of our main concerns starting opening office. Could we get the culture to fit? But I think today we have a very good balance between quite a lot of people actually coming from Europe, but also, of course, a lot of local competencies and languages. So I think that the white label is something that we could explore more out here. A lot of our business, obviously, interacting with larger institutions that we see as good distribution opportunities and that can see a shortcut coming from us. We've been fairly successful with that in Europe and have had less penetration in Asia so far, but that's something we're definitely focusing a lot on in that in the perfect world, we actually prefer to distribute via partners rather than directly.
Alex?
Sure. So when I first moved to Singapore in 2007, I'd been in Australia doing e-commerce sales for Citi for 5 or 6 years before that. Citi had no real FXPB business in Asia at that time. We were just really sort of starting our sort of big ramp up in FXPB globally. And for me, it was a very easy thing to do because within the region, the broader region, and I'm going to sort of talk specifically about Japan here, I was just sort of struck by how much business at that stage was being done by Japan and how clean that business was insofar as the fact that, you know, Japanese customers were being handled by Japanese brokers. The Japanese brokers were well regulated. It was very obvious who was who. The flows were already very, very significant. And really, as we looked to establish a presence in the region in the FX prime brokerage space to start with, it was those Japanese brokers we were able to service effectively. We have a strong franchise in Japan. And we focused on those, and we managed to win over a number of the sort of larger brokers fairly quickly as initial clients of our business. And sort of since then, obviously, we've continued to focus on Japan, but what's emerged over the last sort of more recently, sort of 4 or 5 years, I guess, is this more complex business of people tapping into markets that I can't access directly from Citi's perspective, so markets like China and India, in a way that means that we're one step removed, I guess, as a provider. We're one step removed from the market than we would be, say, in Japan. And that's not a bad thing. It's a more complex way of doing business, and it requires maybe a little bit more imagination and a little bit more sort of nuancing in terms of understanding who plays what role in which markets. But certainly, that initial piece and the very simple, very straightforward, very well understood piece that I worked on was the Japan market, which I think has been, a great stepping stone for us.
So moving from Japan to China for a minute, Andrew, IC Markets is known as a company that has created a huge, let's say, net of partnerships in China in a relatively short period of time.
Yeah, I mean, one of the things that we've always focused on is building IBs, and mainly through automation. So we have a system where an IB can register, and we have sub-IBs, etc. So as a result, we've managed to get a lot of the more residual sort of IBs that most of the brokers probably wouldn't be able to get. And, in China, I think the IB market is huge. And, for us, that's been something that we've really driven home in this region anyway.
Okay. And going back to Japan, putting aside Japan with its very, very clear regulation and talking about FXCM, where do you think, or besides Japan, which body or entity of FXCM do you use in order to penetrate other markets in Asia, let's say in specific parts of Asia?
So I think that what we do is we're lucky enough or unlucky, depends when that happens, is that we have a UK regulated entity, an Australian regulated entity, a Hong Kong regulated entity, all of which Chinese customers sort of gravitate to. So the majority of small customers would go to the UK only because they have £50,000, insurance on their account, and it's probably the FCA, probably the most well-known regulator, for the business. That's well recognized in China. But a lot of the big clients prefer Hong Kong because they have a lot of money there anyway. They sort of, it's much more closer to home. They can visit the office there. They can do those things. So I think that having a big entity in Hong Kong, we have about 100 people there. Really, that's kind of our regional hub in the area. It's done us a lot of good, and Hong Kong is an expensive place to do that in, but, a lot more, it's a lot more beneficial than most people think. And I think that we have a menu of essentially places where you can go, and that's, something that's very interesting. And, for example, we have a Canadian license, and in Canada you can open an account that's insured up to $1 million Canadian dollars by the Canadian government. And I think that's something that's, that's attractive. I think that's sort of been our, in respect of Asia, a lot of people really like that we have lots of different places to put them and different solutions for different people from that regulatory perspective. But I think also the biggest thing is not per se which entity, but per se that I think the biggest thing about Asia is that, and what I like about the FX business, it's a very international business, and it's a business that gives its international element a lot of respect. But I think Asia doesn't get its due respect, and I think we do well here because even though the clients are legally warehoused in a regulated entity that's in Europe or somewhere else, the character of the businesses, and like Glenn says, these are, every country is its own country, is very much supported, by local talent, and not just a bunch of local speakers. So it's not enough to say, I have 10 Chinese speakers and 10 in PRC and 10 wherever, right, supporting my business. You have to have Chinese management. You have to have, people with real experience, not just drones, taking orders. And I think what we have done, because we've been here for a very long time, is we have a very deep bench of not just that we have a lot of employees in the region, we have a very deep bench of local management in the region, be it in China, be it in Shenzhen, be it in Tokyo. And I think that's something that's extremely important, that those people have the operating freedom, right, and all the thing, and the culture of the company take into effect. It's not so much culture, but the company headquarters take into effect the fact that the locals know better what to do.
But
Right.
can you say if it's more advisable to open a local office in the Asian markets, or rather just acquire a company? Is it possible to make that distinction?
I think one of the big problems about acquiring, I think what Alex was saying about Japan, and we acquired 2 brokers in Japan in 2011. Japan, it's a good place to acquire companies. It's extremely hard to set up. And Japan is a very orderly place. So you're acquiring companies that have very high compliance standards. You're acquiring companies that have very set rules, are very well regulated, and you're not really taking a lot of chances acquiring Japanese companies, right?
Aside Japan.
But the rest of the region, you're taking a lot of chances, and you're taking a lot of chances because just like you have a lot of offshore firms from wherever they come here, lightly regulated, treat the region as if they don't have to be policed as if they are back home or not policed at all, and do whatever the hell they want. The Asian companies act the same way. So you have enormous, like the standards in, obviously in PRC, in Indonesia, and those places, by a lot of firms, it's not all, but a lot of firms is very low. And I think for most Western firms to go buy that company legitimately, you're going to run into lots of problems. I give you an example. Third-party transfers are not illegal and actually widely practiced even in Hong Kong. But obviously, they're not allowed for an American or a British company, and most Western firms are not allowed to do third-party payments, and that's a huge portion of the local business. And so that's something, there's little things like that you buy a company, you run into that's 30% of their business, that's 30% of the business that you legally just cannot take.
Glenn, what is your view on this issue?
Not the issue on third-party payments. You just mean you've touched on it a couple of different ways. I think it's true about building the bench strength. I mean, it's a little bit interesting that you have three kind of if you will, Chinese-based or Asian-based companies that are represented up here. I think number one, that's testimony to the fact to the global nature of the market, as Drew mentioned. It's also obviously testimony to the opportunity that's in the region. I think if you just kind of look at capital markets in general and in this evolvement, it's kind of an interesting cycle. You have markets that are really well established, like in the UK or in Western Europe or like in the US, and the rules become onerous at some point, and it feels like those markets don't have a lot of upside. Now, on the one argument you could make, you say, well, they don't have a lot of upside for a startup, but they have a lot of upside for a well-established place that's deeply capitalized and can deal with a lot of these hassles, whereas some of the Asian-based markets have, a little bit of a lower hurdle to get involved, but then as those investors and